Welcome to the Ideal Investor Show. Challenge your mindset and discover where you are. Let's go. Hello and welcome to another episode of the Ideal Investor Show. And you know that we are about to start a new season that we call the season about the age of abundance. But it doesn't really mean that we are going to abandon all the regular real estate related content. And our guests will still have here and there some real estate related topics. But we're clearly going to shift because I want you to learn from this podcast what are all the different aspects that are impacting our lives, both as investors as well as regular people living our lives. So before we get to that, and you will see episodes starting with episode 500 with a wonderful interview with the great Alexandra Mertz from Tesla Boomer Mama. I want to have today's episode talk about the reallocation of funds. And to start out, you all know that I've always been saying, how am I dividing up the pie? And with pie, I mean, like, how do I distribute the different investments? So the starting point, and I've said this many times in many episodes, is that the initial allocation, if somebody starts out new and let's say you had something like $100,000 or $200,000, I would and have always been recommending to have 60 to 65% in residential real estate, about 10% in stocks, 10% in cash, 10% in gold, silver, diamonds, stuff like that, and 5% in Bitcoin. Now, with changes happening in the world, and I'm pretty sure you are paying at least to some extent attention to what is happening in the investing markets, what's happening in the stock markets, what's happening to your real estate investments if you have some or if you're planning to have some. And that also includes what is happening in the money markets. And one of the things in this context that we have spoken about quite a few times is that in the money markets, and I wrote an article in our newsletter where I'm talking about the M2, which is one measure of how much money is actually in circulation, that has been increasing massively throughout the years and has now reached really critical levels. That in turn also means that the purchasing power of every individual dollar is going down, number one. We know about inflation, number two. But then there's also another aspect to consider, and that has to do with the fact that when you see the trust that people have or don't have in a currency, that they obviously start looking at alternatives. And one of those alternatives is to say, okay, how are countries dealing with each other when they're selling and buying from each other? And it used to be that 80% or more, I think it was even at times above 90% of all those trades happened in US dollar. Now, that also meant that because of the exchange between the local currency, whether it's a peso or the euro or some pound from the British or whatever it is, there's always a little bit of a loss and a little bit of a fee, basically, to exchange from one currency to the other. And the United States dollar has always benefited from that. So countries are looking around, looking at what is actually happening in the world, seeing that countries are getting punished, whether you look at tariffs, whether you're looking at confiscating certain things and so forth. And that begs the question, what can I do if I do not want to be exposed to this currency risk? And one thing that we have always said is, well, you can put some of your investments in gold and silver. You can have them as bars, or you can have them as coins, or you can have them in an ETF if you want to take that risk. So there are multiple ways to do this. And I've always said one small portion, like 5%, you should have in Bitcoin. Now, what is emerging, and I want to actually encourage you to dig into this more and become more and more of an expert before you do anything, is that Bitcoin is turning out to be pretty much one of the very few, if not the only currency other than gold and silver, that nobody can manipulate in the sense of making more of it, making less of it, confiscating it, or anything like that. Yes, a country can say we do no longer allow, for example, an exchange, or we do no longer allow trading, but you can tomorrow open a wallet, an account in another country, and off you go, and you just transfer what you have in your US wallet to another wallet, and you're good to go. The coins, or in this case, the Bitcoin itself, is not really affected And as I've said many times, there are overall ultimately going to be 21 million Bitcoins that will ever have been mined, have ever existed. And when you keep in mind that some are being lost because people lose their password to get access to their Bitcoin, right now we are at basically 20 million that have already been mined or have already been in existence, and 1 more million to come. And that is going to take quite a while, but fundamentally it is known to everybody that there is a limited supply, and when that is all been mined and it's all in circulation, then all the Bitcoins that will ever exist are there. So why am I telling you this in the context of reallocation? I'm thinking that Bitcoin is establishing itself more and more around the world, and it will even get more of a push when you look into the currency space, like I was talking about dollars and pesos and pounds and stuff, all of the different places that issue currency, issue money, they're all talking about creating a digital version of the money. They want a digital dollar, a digital euro, a digital peso. So if you then actually get to this point in a few years, what is really the difference between a digital currency like Bitcoin or a digital dollar or a digital euro? Now, the one big difference is that the Bitcoin cannot be manipulated in the sense that you could make more. Because what's happening right now in Europe and in the United States is we're creating more and more debt, and we're just printing more money without anything behind it. While in Bitcoin, you cannot do that. There's a limit, there's 21 million, and that is it. Now, what will be the result of that limit? It means that when all of them have been mined, or almost all of them, like today, the value keeps going up. And we are now already above $100,000, and there's every expectation that in the next 10 years, it will go from $100,000 to $1 million per coin. Part of the reason is that there is a limited number. Part of the reason is that a few get lost because people forget their keys, basically their login password, to their coins. So you can't get to them, they're lost. And part of it is because people want the freedom to move their money around however they want to, not guided or strangled by the government. So that's a form of reallocation, and I'm not saying to take action today, but I want you to consider if that 5% allocation that we used to have in the past should maybe be upgraded a little bit. Maybe it should be 10% and only 5% in cash, right? Something like that. So think about it. What is your new reallocation? What are your new percentages? And then maybe you share them in the comments, or if you like to have a conversation, how do you actually get into gold, into silver, into Bitcoin, into diamonds, then please contact us. You can just go to idealinvestorshow.com or ideawealthgrower.com and you find the button to book a call, and then we can have a conversation and we can look at how can I help you one-on-one, individually customized to what your needs are. So that's it for today. Be well and stay safe, and I'll talk to you next time.